You're listening to the right episode if you wanted to hear 4 strategies to get buyers and sellers off the fence and motivated to buy now in today's marketplace. I'm your host, Steve Kiles. You're listening to the Loan Officer Leadership Podcast, powered by the Mortgage Marketing Animals. Hey, and before I get into this real quick, one of the things I want to do is at the end, if you want what I'm about to share, you'd like to get a copy of the PowerPoint with some of these talking points, go to freedomplanningcall.com. If you're not a Freedom Club member, and we will give this to you. So just book a strategy call, tell them, hey, I want the PowerPoint with the 4 strategies to get buyers and sellers off the fence, and we'll give you a copy of this PowerPoint. If you're a Freedom Club member, this is already done for you content that I created and is accessible so that you can customize, present it to buyers, present it to sellers, present it to your agent partners. And this is a game changer because it's really going to help you fight fear, anxiety with the data and the correct information that people need to know that now is the right time to buy. So what's really cool, I thought I'd jump on a podcast, just share with you something I'm doing in my market. I'm a producing branch manager, and I run a network that allows branch managers to plug into the network to utilize the operations and the excellence and the recruiting and training and all of the things that go on. So whether you're a loan officer or you got a branch, we've created something you can plug into. And so this is something that I've actually been using and giving to my loan officers and teams and branch managers as tools, but then also with our agent partners. I've got a team that produces locally in the Texas market. And I've got to tell you, this has been a game changer because what we're finding is that in today's marketplace, there's a lot of misinformation in the 24-hour news cycle, the propaganda type, man, and I hate to even say that, but it really is. It's like the sky is falling. What they're doing is spinning information that's sensational, creates emotion, gets the headlines, gets people to look and read. And then they say, well, man, I'm going to wait for rates to come down. I'm going to wait for home values to come down. Man, I'm going to wait till the market gets more stable. And man, if I would just wait, then I'll save money. And what I want to do is give you the 4 objections and then the talking points around those objections so that you can educate buyers. You know, I was with my buddy Dave Savage just a couple of weeks ago, and he threw out a phrase that I keep meditating on, but it's speed to the need. And with a mortgage coach, in which those guys are doing, I mean, I just love it. And it kind of has stirred up these talking points because when Dave and I were together, we spent the day together, I don't know, a couple of weeks ago, and the banter back and forth was the importance of an originator becoming a mortgage like a mortgage advisor. A modern mortgage advisor is one of the phrases he uses, and we talk about loan consultations. You got to have a loan consultation because the loan consultation is what's so powerful in giving the right information. And so here's what I always start with. It's not your fault. It's not the buyer's fault. It's not the seller's fault. It's not the agent's fault. They didn't know. There's so much bad information going out. It's going to be okay. So it's not your fault. It's going to be okay. Here, let me help you. I love that talking point that I learned. Carl White taught me that. And it's, hey, it's not your fault. You know what? You didn't know that now's the right time to buy. You didn't know that the media is giving misinformation. You didn't know the power of appreciation. So it's not your fault, but it's going to be okay. And you know why? Because I'm your professional, and I'm going to walk you through this. And armed with the right information, documents, and data, we're going to dispel fear, anxiety, the myth, the things that create people to pause, because documents and data in the right order, in the right place, can help you fight fear and turn it into action steps. The third part was, hey, let me help you. Here's how I'm going to help you. I'm going to help you overcome the fear and anxiety with facts and the right information. And I love this. I saw a buddy of mine did a great presentation at our Freedom Club event, and Carl showed this as well. The MBA put out some graphs and a stat to show that literally 2023, historically, in the history of mortgages for the last 20 plus years, this will literally be 2023 will end up literally as one of the top 4 or 5 purchase money markets in more than 20 years. So when I look at, you're looking at 2011, it was better than 11, 12, better than 13, better than 14, better than 15, heck, better than 16, 17, 18. We're going to be in an even better market than 2019. And you've got to understand, first off, this is a great purchase money market. It's the right time to buy. Why? The sky's not falling. The media picks and chooses what they say. So here's the 4 challenges we've got to dispel. Number 1, reluctance to give up the low rate and move up. How many times have we heard that? A reluctance to give up the low rate and move up. Number 2, waiting for rates to come down. Number 3, waiting for the housing prices to come down. And some people are simply waiting for both rates and housing to come down. And number 4 is the hesitancy of buyers to pay over ask on a home. And so I want to dive into these challenges because I bet every one of you have heard at least one, if not 2 of these, when people say, I'm going to put purchasing a home on market, on the shelf. I'm going to hold off. I'm going to wait till these things come back and get better. So let's dive into it. Number 1, the reluctance to give up a low rate and move up. Here's what's interesting. Now, what I'm known for in the marketplace and industry is having some of the best scripts and talking points and what I call design conversations. So let me tell you how I do it. When you get the PowerPoint, if you're a Freedom Club member, it's done for you content, grab it. If you're not a member and you want a copy, go to freedomplanningcall.com. Tell one of the team members when you schedule a 45-minute call with myself or one team members, we'll literally walk you through this and give you, the ability to take screenshots on it. That way you got it. So just tell them, hey, I want to see Steve's presentation on 4 strategies to help buyers and sellers get off the fence at freedomplanningcall.com. Okay. So we'll give this to you. But one of the things I do is this. When I'm looking at how to design a conversation, how do I build my talking points? All I need are 4 or 5, maybe 6 talking points that literally will carry me through half a year because every time I'm having the conversation. So look, I'm reluctant to give up a low rate. Of course, most of the market right now is sitting under 4%. Why would I give up a 2.5% rate to move up to a more expensive house and get a 7% plus or minus rate? And here's why. The average homeowner has $274,000 in equity in their current home. That's just the reality. And so what we've got to educate people is, listen, hey, I completely understand. Most people would think it's not a great idea to give up the low rate to move up into a bigger home. But listen, we find that $274,000 is what the average equity in most people's homes is right now. So the average homeowner has $274,000 in equity. Let me ask you this. Do you have any consumer debt? And here's the talking point that we know. The average family household has $96,371,000 in consumer debt. So when people are saying, hey, I don't want to give up a low rate to get a higher rate, the next question is, hey, listen, we find that most people in the marketplace have about $274,000 in equity in their home and about $96,000 in consumer debt. Quick question for you. Do you have equity in your current home? Do you have any debt currently that if you paid it off would be a massive relief and free up big cash flow on a monthly basis? People are reluctant to give up the low rate because they don't understand the rate's not important. A mortgage is a tool. What I want to do is use my equity, pay off the high credit, high interest debt. Even if I'm going from a 2.5% rate to a 7% rate, listen, on a $400,000 house, you're not it's not as impactful as you would think, because look, if somebody's got $96,000 in consumer debt, they're probably paying $5,000 to $7,000 a month in outlay and monthly cash flow. So if we could wipe that out by selling your current home, reduce your monthly expenses, you would still have enough money to put down to purchase the move up home and still make a difference in your monthly payment. You'd pay less per month by giving up the low rate to gain the equity to pay off consumer debt. I think it's a great way to help overcome the reluctance to give up a low rate and move up. Number 2 is this: waiting for rates to come down. Here's the thing, man. Rates coming down, how do you know they're going to come down? Well, they don't know. It's a guessing game. And the reality is a 1% difference in monthly payment is not as much as you would think on a $400,000 loan amount. Now, use that as a $400,000 loan amount because the average home price right now in America is $416,000. So let's just say you get a $400,000 loan amount. If I'm waiting for the rate to come down 1%, so from 6.5% to 7% to 5.5% to 6%, I'm only saving $250 a month. That doesn't sound like a lot. It may, some people may say, well, it's $250 a month. Like they may say it sounds like a lot, but the reality is it's only $3,000 a year. So let me explain what happens right now. The average home appreciation in America right now is 5.8%. Over the next 12 months is what it's expected to be. So on a $400,000 loan amount, that house is going to cost me $23,200 more 1 year from today. But I don't want to buy it because I don't want to pay. I want to wait for rates to come down a full percent. They just don't have the right information. So, Mr. Buyer, listen, if it costs you $250 more per month, that's $3,000 more per year. But you're saying you would rather wait to hope rates come down. You're going to spend $3,000 more in interest, which is likely tax deductible. Instead of paying for the house now, you're going to wait 12 months. And we know on the current track for appreciation, you're looking at about 5 to 6%, 5.8 is the average appreciation. You're going to spend $23,000 more in appreciation. If you subtract the $3,000 more it cost you in interest, you're still coming ahead $20,000 by buying today instead of waiting for the assumption or hope that rates are going to come down, which they are likely not. And even if they do, there's no guarantee the amount they'll come down. So waiting for rates to come down is speculative gambling versus buying today, ride the wave of appreciation, come out $20,000 ahead instead of waiting. And when rates come down, if they do, we'd be happy to do a low cost, no cost refi and look at that, evaluating it for you in the next 12 to 24 months. Great way to overcome the challenge we face in today's market where people are saying, I'm waiting for rates to come down. Number 3 is this, waiting for house prices to come down. Here's what's fascinating. Since 1942, home values have gone up 73 times and only declined 7 times. And one of them was neutral. And so what you're looking at is if we're going to bet against the champ of home appreciation, you're not likely to win. And it was interesting because the Case-Shiller report showed that prices up in 2000, people will come in and they'll say, hey, you can't sustain the same kind of appreciation you had in 2020, 2021. Like 2020, we had across the board 10% appreciation. In 21, we had about 19% appreciation. In 22, 6%, and 23 is about the same. And what people will say is you can't sustain that kind of growth. It's got to crash. But here's the thing. Since 1943 through 1947, prices compounded 118%. So literally in 5 years, they compounded 118%, and then they went up 43 straight years in a row. 43. So just because they compound doesn't mean they're going to not continue to go. The same thing happened in 1974 to 79. Prices compounded 93%. And for the next 10 years, rates went up. And it was only on the 11th year, rates went down. The appreciation went down 1%. And then there were another 14 years of positive consecutive appreciation. And people focus on 2007 to 2011, where we saw the dip. But since 2012 till today, that's 10 years of positive gains. You're not likely to see home values drop. You're likely to see them continue to go. And here's why. We're still sitting at low inventory. It's down 38% from 2019. But what most people forget to take into consideration is this: 67% of millennials, there were 72 million millennials, will be in the market to buy a home. U.S. News did a report with Bank of America, and they surveyed millennials, and 67% of them said, we would like to be in the market to buy a home in the next 12 to 24 months. I'm telling you and encouraging you and helping consumers and realtors understand waiting on house prices to come down is not going to be a winning strategy. The numbers prove it. Appreciation since 1942 has proved it. 73 times it's gone up, only 7 times negative and 1 time neutral. So I'm telling you, that is not a winning strategy. So don't wait for house prices to come down. They're likely to go up. They're currently on track at 5.8%. And so that is not a good strategy. Here's number 4. Hesitancy to pay over ask. What I always help people understand is this: with the average appreciation being 5.8%, on a $400,000 house, you're still going to gain $23,200 over the next 12 months. So if we got to pay 15 over ask, you'll gain it in less than a year. So do we risk paying more now to get the house now instead of waiting? I would say yes, because as inventory continues to be pulled on, as more and more millennials get into the marketplace to buy a house, that would actually drive appreciation higher rather than lower. So right now we know you're on track to gain $23,200, but if appreciation goes up 10% to 10%, you're going to pay even more, $40,000 for that same house. So in my opinion, my professional opinion, the hesitancy to pay over ask is proven with the data that 73 times the market has continued to grow instead of decline since 1942. Inventory may be a future potential challenge, and rates matter less than you think. So, hey, I've got so much more in this. A couple of things you can't do. You can't control monthly jobs report, inflation, home prices, lack of inventory, rates, Federal Reserve. But what you can control is your attitude, effort, and action. My encouragement to you today: you've heard something that is a talking point that will help your buyers and sellers get off the fence. It's okay you didn't know. It's okay your agents didn't know. It wasn't y'all's fault. But here, I'm showing you what to do. I'm helping you with what to talk about. I'm giving you the tools to overcome the fear of the market, which is literal propaganda, versus the facts of the market, which now is the right time to buy. And hey, listen, remember, Freedom Club members, grab a copy of the full. What's really cool is I've got the full presentation as well as one of the presentations I did to a bunch of my agents, so you can see how to deliver that for our Freedom Club members. Just log in. It's all done for you. For those of you who are listening and not a member, schedule a call, freedomplanningcall.com, and my team or myself will jump on, and you can take screenshots of these slides with all the data that you want to see. So that'll be a cool way for you to still get what you need. Hey, listen, I appreciate you being on the journey. I hope this helps. It's something that's really helping us with our buyers and sellers having great conversations, because really when they understand the power of the numbers and the documents and the data, it dispels the fear, the anxiety, the holding, the pausing. Now is the right time to buy. Help your buyers, sellers, agents, everyone you're talking to understand that now's the right time to buy. So I hope this helps. Remember, anything worth doing is worth doing badly. Just get started. Go to freedomplanningcall.com. Let me help you with your process team, talking points, and what we can do. So, all right, everybody, see you.